G'day folks, Jim here from FX Charts, Monday the 24th of March. Thanks for tuning in. Well, it was a pretty steady end to the week really. Most players were pretty much on the defensive, I think, with no one really wanting to have too much in it ahead of the weekend in case Russia did anything in the Ukraine. And focus is also beginning to change a little bit, I think, with regards to what might happen with US monetary policy going forward following Janet Yellen's comments after the FOMC last week, and the market will be looking for further comments from Fed board members as we go forward. So there wasn't an awful lot of movement, so we'll have a look at the charts. And starting with the euro, it had a pretty tight day. It had a low of 137.65 and a high of 138.10. We've opened up here really at 138, the figure this morning. There's not an awful lot going on, and I suspect that might be the case for much of the day. There's not an awful lot out today, but we have got all the flash PMIs, so that might push the euro around a little bit, but in the bigger picture I wouldn't expect an awful lot to happen. The 4-hour charts are recovering from being oversold, so we could see a bit of a squeeze up. I think probably for the next day or so, this pivot, this goes back quite a long way. This goes back right back on the weekly charts. So 138 seems to be about it, and I think we might continue to hang around here. On the downside, we've got this short-term rising trend support down around 137.65, Friday's low, and then below there we're probably heading back down towards the 137.25. Although I'm doubtful of heading down there today. On the top side, we could see a squeeze back up to sort of 138.30, possibly 138.5, but I don't really think we're going too much higher than that. We've got the 100-hour moving average here. It's at 138.55 at the moment, and we got the 200 hours at 138.75. I can't really see what's going to push it too much above there today. Moving further out onto the dailies, they're actually looking a little bit negative. So from my perspective, I think they're probably selling rallies towards 138.75 is probably the play on the day. I'd be surprised to see it back above 139, but probably keep stops just above there. If I'm wrong on all this, then we're looking back at 139.66, which was the top there last week before last. And above there we head towards 140, but I can't see that at the moment. And for the time being, I think you just, as I say, use this 138 as a bit of a pivot and trade either side of that. Dollar yen, that's well, having spiked higher after the FOMC last week, it's just drifted low. 102.63 was the top. We've yet to go back below 102, so it's a pretty tight range, and I wouldn't be too involved. The 4 hours are fairly neutral, and the dailies aren't telling us anything at all really. And we've got the 100-day moving average right here at 102.40, and we're a little bit below that at the moment. As I say, we're holding above 102, and it could be that this 100-day moving average does continue to act as a pivot. But right now, I think there are better things to look at. Sterling's possibly one of those. That does look heavy. It's currently looking as though it's just trying to break down through support here at 164.70 right on the opening here in Asia. Now if that keeps going, then if we move further out, we've got further support at the the 100-day moving average at 164.25. Below that we need to go back here. On the dailies there's not much support here to 163.5, but in the meantime we do have some support down around sort of this low here, which is around 164.20, and then once again the 76.4% of this move up is below 164 at 163.85. Now the 4 hourlies are slightly negative, and the dailies they're pointing lower as well. So I suspect we may be in for a test of 164.25. And if we can get below there, then as I say, we're probably heading towards 164, if not possibly lower. There's not much UK data out today. There's none out today really, but we have got the CPI and the PPI tomorrow, and then on Thursday we've got the retail sales and the RPI numbers. So I think it's probably going to be a fairly choppy day. 164.70 could well hold on the day, but it's not looking particularly flash for cable. And I think if we saw a move back to sort of 165, 165.20, probably a sell on the day. The Aussie is slightly better bid this morning. It closed at 90 3/4 really, and it's come up. It's opened the week with, as you can see, with a gap slightly higher, been up to a peak of, where has it been to? 91.10. Surprised me a little bit, but it's been up there. Now we've got the flash Chinese PMI, manufacturing PMI later on today in Asia, so that'll provide some direction. The 1 hour charts slightly overbought, but have got plenty of room to go on the top side. The 4 hours beginning to point a little bit higher as well. Now, if we can head higher, this 90.38 was last week's high. Beyond there, we've got the neckline. I can show you more clearly on the dailies. We've spoken about this before. Up here at around 91.40. Now, that's where the 200-day moving average is. If we can break above this sort of 91.40 area, then I think we're really in for a bit of a move. And the objective from the top to the bottom of the head and shoulders is somewhere up here around sort of 94.5, 95. I haven't worked it out exactly. We'll work that out as we head towards there if we get there. But there's plenty of room, and the first major resistance would be around the 38.2 area. Now that's just under 93, about 94 cents, so 93.85. So there is plenty of room to work on that. On the downside, if the Chinese PMI numbers are poor, then I think we probably head back down towards this 80, 89. No, this is 90. Really, around 90 the figure. There's going to be support here around 90.20. So I wouldn't get too excited just on the top side, but it does look to me as though that we are building for potential of a squeeze higher. And the Aussie really has held quite well since the sell-off of the after the FOMC last week. And I kind of like buying dips in the Aussie for an eventual look to see what lies on the top side. There'll be plenty of stops if 90.40 gets taken out, and we could indeed head higher to 92, 92.5 in fairly short order. The Kiwi is currently holding on to this uptrend support here. Now I'm not quite sure what to make of it. I'm a bit doubtful that we're going back up here above this 86 level. Up here, 86.40 was the high. So while we're 85.40 at the moment, I kind of like selling into strength up here around the 100-hour moving average is about 85.65. So I kind of like selling there with a stop probably above this high here, which is at 86.05. Looking for another move to the downside, mainly because the dailies do appear to be rolling over a little bit. Now, I wouldn't be getting too excited either way, and as long as 85, the figure holds, the rising trend support is currently at sort of 85.25, and then below there, as I say, we've got the first FIBO, so around about 85, the figure. So as long as that holds, the uptrend really kind of remains intact, I think, and we could eventually get another move to the top side. But right now, I think 85.65 to 85, the figure on the day probably covers the range. Okay, now then we're going to have a look at the dollar index. Right, okay, here we have a daily chart of the dollar index. Now, we got down and tested this support down here. This was the 91 figure 10 area. The low was actually 79.26, and we reversed quite sharply off it. And on a weekly basis, we've gone back above this long-term, what was support, turned into resistance. It's now become support again. That's at 79.90 odd. And we've also taken out the 200-week moving average, which I'll show you in a second, at 79.85. Now, if we can head higher, the first real port of call is around this sort of 80, 45, 50 area, where we've got the descending trend resistance and the 100-day moving average. And if we can take that out, then we're heading probably back up to a sort of 81 the figure, where the 200-day moving average lies. Now, more interesting, I think, really at the moment is that the MACDs, which had been heading pretty sharply lower, now they crossed and turned equally to look sharply higher, and it does look to me as though we could be in for some more of a push to the top side. Now, if we go and have a look at the weekly charts, so as you can see, we've taken out the 200-week moving average, which is the pink line here. We've taken out this long-term trend, which previously support, and we've broken back above it. And it looks to me as though we could be headed up here towards the 80-50 level, which is this the descending resistance. Now, the weekly MACDs, they look as though they may be turning a bit higher. They were running out of steam on the downside. As we can see, we got some bullish divergence. Now, until they cross, I wouldn't be getting too excited, but that could happen this week or in the following week. And if they do cross, then we might see some more in the story of returning US dollar strength as the market looks towards a Fed tightening and a continuation of the current tapering program. So that's about that. Elsewhere, keep an eye on sterling Aussie, which looks to be the most interesting of the crosses to me, purely because we've finally broken down below the 100-day moving average here. Let me just get rid of this, clear it up a bit. So we've broken down below the 100-day moving average, and we've also broken the neckline support here. Now, the cross is actually gapped to open lower this morning. We'll just go and have a look at the hourlies. Yeah, it's gapped to open lower. The 4-hour charts are looking somewhat negative, but it's more the long-term picture that I'm looking at here. And if we can break down through this support here, we're currently sitting right on it at around sort of 181. There's a good chance that the head and shoulder objective brings us back down to around sort of 177, possibly even lower. We've got the 200-day moving average down here at 175.5. Now, this is obviously going to take quite a long time to come to fruition. But if the reverse head and shoulder that we talked about in the Aussie comes about, sending the Aussie higher, then this cross is going to go lower, and maybe a decent play with. So right now I'd be looking to sell rallies with a stop loss back above the neckline, probably around 183. So if we saw a rally to 182 or so, currently sitting at 181.10, we've taken out the stops already below 181 this morning. So we might see a bit of a squeeze higher now, but selling it at 182, somewhere around there with a stop loss at 183, doesn't look a bad game to me. Okay, so that's about it. There's not an awful lot of data out today. As I said, we've got the PMIs, and there may be some. I think it might be a fairly steady day, but that'll ramp up during the week. Overall, there's not a huge amount of primary importance. We've got the German IFO tomorrow, and then the US GDP on Friday. Although there is quite a lot of secondary data out this week, so it could be pretty active. But I think at the moment it all looks to be a bit choppy. So I think trade fairly careful. Keep stops pretty tight. So that's about it for today. So have a good one, and we'll talk to you tomorrow. Cheers.